As you can see, as I have been telling you about the technical analysis, how you can determine swing down in a trading chart. Yes, this is daily chart, and as you can see, look at these three candles. Look at these three candles. Look at them very well. Look at the one on the left hand side. It couldn't engulf. This is the highest height that the market has gone, and this was the previous candle before this one formed. So the buyers drag this market down to this extent, and the sellers start bringing market down to this place, and buyers push it up again, and market close on this area, and the new candle formed and start forming on this area. So I have been telling you that for you to determine swing low, three candles must determine the swing low. And how do we? You can see the three candles. You can see the three candles. See, look at this one, then see the other one at the top and the one on the right hand. Once you see this type of candle form on any of the time frame, more especially on a daily chart, is a very strong time frame. Yes, so once you see this type of candle forming in this way, note that on the premium, more especially when market has gone to this highest height, once you see this three candle form, note that the market must fall to come back almost 50 to 70% of the buy. It must cover the buy again. That is the lapses. We call it liquidity void. It will now come back and cover the lapses. So this, I call it swing down. So whenever I see this three candle forming in this way at the upper side, I know that the market must fall down. The market must fall down. So always use this three candle. Use this three candle to determine. Yeah, you can see it in 4 hours. If you see it in 4 hours, note that all you should be putting a sell. All you should be putting a sell. Whether you are trading forex, you are trading crypto, you are trading anything, note that market must fall to a reasonable height before it start rallying back again. Look at it. The market fall down to this extent, down to almost 80% of the buy. You can imagine the buy started from here. You can imagine this market started buying from here and started buying from $1.69, then go to a height of $2.58, now fell down again to this low again of $1.72. Do you see? So once you see these three candles, one on the left and one at the middle, the one at the middle should be the highest height. Then once that candle closes and you see a wick on it, note that the next candle that is coming must fall. Now, how can you use this method now to determine what is happening in this area now? Look at it. This is still on the daily chart, and you see that the same format has also started again. Now you see the candle, another with this candle on the left side now, and you see the one on the middle. This one on the middle now go to $2.70 and start falling. Now this is daily chart. If by tomorrow these things remain like why you are seeing weak, meaning that the buyers are no longer in the market, they are weak now, then the sellers has come into the market. That's why you are seeing that weak. And the same thing that happened this place, you can use the same bias and locate the same thing here. That is exactly what is going to happen here. Yes, you will see that peradventure, if the market closes this way, the next one that might open will be a sell candle, and it will come up to this level to even up to $1.90 something cents. Okay, first of all, it might test here, test this place, $2. It might test $2 20 something or 30 something cents, $2.29. If the pressure continues, it will fall down. So for you to determine swing down, three candles at the premium must appear. the one in the middle must be the highest. Then the next one following on the right side will now show you that you should enter sell, and it must sell. So that is the way you can use this trading strategy to trade whether forest or anything else. So this is a beautiful way you can trade. You can trade. Always remember, once you see this candle, so the opposite of it is swing up. How can you identify the swing up? Now look at this same place. Look at this place now. You are seeing three candles. One on the left is the last sell candle. Now this this candle also sold before buyers came. Remember, sellers are on this side now. Here now is the opposite. You see the same three candle appear. The middle one is the longest. Note that the middle one is the longest, and no other candle was able to engulf it. So once you see this thing at a discount area on the highest time frame, note that that market will buy, and first of all, it will take off the previous high, and that is exactly what happened here. It take off the previous high, then continue rallying down to $2.38 before it now came down again. Look at it. Oh, it now came down again. Look at this candle. It now came down again. Remember, it started rallying up from here down to this place. Now came down again to cover what we call void. Yes, the same place. It starts rallying, almost the same thing. So note that two people are in this market, the buyers and the sellers. Now they bought from here, they sold from here. Now bring back price down almost to the same place they bought from before they start rallying up again. So you can use this as your trading strategy. Always locate when these three candles appears. When they appear at the discount area, you must buy, and when they appear at the premium side, you must sell. Thank you very much for listening.